Hey there, YouTube. Yes, I'm eating lemon crepes right now. I know when I uploaded that 1-minute segment of me in a day in the life of high altitude, I was eating orange chicken and people commented on it and were concerned for my health. So I just want to let you guys know that I do eat healthy like 90% of the time. The other 10% I might have a cheat day or just eat a lemon crepe for breakfast. You guys don't really have anything to worry about. I always exercise, I'm always being healthy for my business and my YouTube channel. But I just think it's funny how concerned you are for my health, so I guess thank you. I don't really know how else to reply to that, but today's video is gonna be awesome. It's gonna be really valuable. It's how to play Bitcoin. So I'm gonna be teaching you how to look at Bitcoin, how to make your counts, your wave counts, make your trading plans, and then play it so that you can profit off of the next move, whether it's up or down, and kind of how to work it. So let's get right into this. So I'm on CoinMarketCap here, and the total market cap is at $214 billion. And the price of everything is in the green right now. We've got a couple names that are going really crazy. Like Nano is up 28%. And I'm going to get into a little bit of a deeper analysis of the wave count of Nano here in a second and talk about why it's doing what it's doing. And then you have Lisk, which is up 19% as well. It's doing well. So, you know, the total market cap is looking really good right now. I'm just hoping that we can get above that $224 billion level. Let's just click on that and look at the support and resistance one more time. We talked about this in yesterday's upload as well. So if you missed that, go ahead and check it out. But yeah, if we can get above this $224 billion level, that would signify a higher high. That would be really bullish. Today's episode, we are going to be talking about how to play the Bitcoin chart right now. So a little bit talking short-term stuff, how to do your wave counts, how to make your trading plans, how to look at it, how to do it smart, then also how you should be thinking about Bitcoin in the long term. So it's going to be a really valuable video today, so you're going to want to watch through the whole thing. If you're new to this channel, go ahead and hit that like button, hit that subscribe button. We just teach how to do technical analysis on cryptocurrencies and in the Bitcoin space using Elliott waves and a few other things. So I'm really excited to teach you guys how to play the Bitcoin chart and how you can do this, because you can apply this same logic anytime to Bitcoin from now on. Going on with the market overview a little bit more in depth here, I just want to say that I am bullish on things currently as long as that resistance level can be broken and as long as the $190 billion support area holds. If these two areas can react as I suspect that they will, meaning that 190 billion holds as support and 224 gets breached as resistance, then we will likely see a nice wave up in the crypto markets and a lot of short sellers getting squeezed out of the out of the picture. So that's the support and the resistance levels that we're watching. Okay, so Nano is doing really well in the market right now. So I want to jump over to this awesome website. Links in the document. This is coinsignals.trade. I found this on Twitter the other day. It's a really great platform, just website that connects all of the CoinMarketCap charts to TradingView. So this is really awesome. I know I made a video like 2 weeks ago that taught people how to do TA on CoinMarketCap charts because we don't have TradingView for them, but apparently somebody made a website recently that allows you to do this now. So that's what this is. This is coinsignals.trade. Again, links are in the document description that I provide in every single video that I make. So go ahead and click on the document in the description below and check out this website that allows you to do TA on CoinMarketCap charts. So Nano here against the dollar. I have a wave count. This isn't a bearish trend, so that means that you can count Elliott waves down. As you guys know, Elliott waves are 1, 2, 3, 4, 5 impulses up. But when there's a bearish trend, you can also have
subwaves of an ABC correction, which have 1, 2, 3, 4, 5 wave structure. So that's what we're getting right now, is we're getting impulses down, bearish impulses. So this is a 1, 2, 3, 4, 5 wave down structure in nano. This was a big ABC wave up. And this is because we're in a bearish trend. So this was a mini ABC wave up. You can see in the wave, the way that it's structured looks a lot more like an ABC than an impulse like a 1, 2, 3, 4, 5 wave, right? They just look differently. You can actually see it in the structure of the wave and the way that they look visually. As you can see, this right here is that ABC wave. It like curls up, and then this is the 1, 2, 3, 4, 5 impulse down, and you can see how it's very 1, 2, 3, 4, 5. You know, it's got that structure to it. It's just a different look than the ABC waves. So once you get really good at counting your Elliott waves, you'll start to be able to see that. And once you understand like the subwaves and how there's always an ABC after 1, 2, 3, 4, 5 waves, then you start to get a better picture of what's going on, and you can kind of see the wave structure and visualize it. It's hard at the beginning when you're new to Elliott waves. It's kind of hard to see it, but as you start to learn the little rules and the things like how 3 waves are bigger than 1 waves, for example, it's a rule that the 3 wave cannot be the smallest wave in the wave set. So that means that the 1 wave has to be smaller than the 3 wave, because it's likely that the 3 wave is going to be at least the same size. Well, it's always bigger than the 1 wave. So anyways, you take those rules and you apply them, and it helps you kind of get a better perspective on what's going on, allows you to count the market easier. So this right here is nano. After that ABC, there was one more 1, 2, 3, 4, 5 impulse down that we got in this market, and that produced a left shoulder ahead. It found support on the right shoulder, and then an impulse about 184% on the upside from 83 cents up to the first real target at around $2.45. And then you've got a couple other targets here that we're kind of watching to see if they get hit. If you hold some nano on the short term, you could obviously use these and play this wave count, because once this is done going up based on Elliott waves, this needs to retrace back into its wave. So you could set buy orders either down here or a couple right here and one to a new low in case it drops lower. But either way, that's just kind of how you use a wave count to get a better picture of what's happening. And that's kind of my technical analysis on nano right now. So I'm just watching these levels. I do suspect these to be heavy resistance levels because that was the ABC wave, and it's likely to produce some type of selling action here. So, but again, that would just retrace back into its wave, and you could play that even more down the road. So that's my TA on nano. Hope that you enjoyed it and you found that kind of useful for your wave counts and your perspective on that market. Okay, so now let's get into how to play the Bitcoin chart right now. So clicking on Bitcoin, I have a few questions that I wrote down that you should really be asking yourself when you're deciding what your trading plans are going to be and how you should be playing Bitcoin. So ask yourself, how will you play Bitcoin? And then after you ask yourself that question, you need to make primary wave counts, secondary wave counts, trading plans around both wave counts, and then decide that you're going to stick to that trading plan. We have this thing in the trading world called plan the trade and trade the plan. So you really got to stick to that and make sure that you're doing that in your trading today. And then you bet your money on the primary count because your primary count is the most likely to occur. So to determine your primary count, you use all sorts of things like indicators, Elliott waves, the rules in Elliott waves, certain things like market structure, so you can determine what is a more probable wave count, what one isn't as likely. and really just a whole tool bag of things. And that's kind of what your job as a technical analyst is to find primary predictions and find all the little indicators, structure, Fibonacci, all of the different things that you can learn to kind of help aid your trading to get a better perspective on the market. You don't want to overwhelm yourself. You want to keep things simple. You know, I like to keep simple trading plans, meaning that I only have 5 to 10 things that I look for to signify whether a trade setup is good or not. But that does mean that you really do want to have a good perspective on the market. You want to educate yourself, learn all sorts of different little things, learn how to use the MACD. One of my favorite things is divergence. I talked about this in a couple episodes back, I believe, bullish and bearish divergence. That's a great tool when you're utilizing whether a wave count is more likely or not. I also like to use the MACD. Like right now we have a histogram flip and it's oversold on the MACD, which is actually a bullish signal. So that is producing some buying action based on that signal. And then support and resistance, I like to use triangles, falling wedges. This is a falling wedge that I've drawn right here, this kind of triangle pattern that you can see. And then I like to watch for the bigger falling wedge patterns. And I like to watch for bull flag patterns, bear flag patterns, rising wedges, all of these different little things to help me determine what is a more primary count and what is more likely to actually happen. So currently, if I was to determine what my primary counts on Bitcoin are, I'll just show you what my short-term primary count is, because for the purpose of this video, so that you can kind of use this down the road and determine trading plans. Even if this isn't the same exact point in the market, if this is, you're watching this video even months later on and you just use the same perspective that I'm using to make your trading plan on the market today. When I'm looking at this, I see the potential for 2 different waves on the short term. So this basically just means you really want to have an open mind in trading to multiple outcomes. You don't want to be locked into any certain way of thinking and be like, okay, this is the only thing that's possible for it to do. You just want to kind of work with what's likely to happen. And then as the chart paints more data, you can kind of peek around the corner and work with that data. So in this specific example, if you were closed-minded to the fact that this might also go down, and then it drops down to 5,000 or even 3,000, you could lose half your value in Bitcoin just because you didn't make a plan for that potential outcome. So that means that it's possible for Bitcoin. I'm not saying this is my primary outcome at all or prediction, but I'm just teaching you a lesson in open-mindedness. If Bitcoin decided to reject off this resistance level at 6,800 and then fall down quickly, and then it panicked to 48 and then bounced maybe, and then it fell even further down to 35 or even 3,000, which is totally possible. Nothing is impossible in a market, right? If this happened and you had no trading plan for this outcome, you would get wrecked. Think about the percentage that you would lose in the market. So you take your price range and you drop from 6,800 down here. That's a 51% drop. You're losing 51% of whatever Bitcoin value you have in the market exposure percentage at that time. So whatever percentage of your portfolio is exposed to the market rather than in US dollar or some type of stable asset. That's just an example of why open-mindedness is so important whenever you're working with markets, is because if the outcome that you're not expecting to happen does happen, and you don't have any type of trading plan to either profit or at least get out of the market so that you're not exposed to any of the panic, then you could really be obstructed and you can get wrecked pretty quickly. So open-minded. Now let's talk about how I'm determining my primary count and why my primary count is bullish right now for Bitcoin. So I'll get into that. Currently, the main thing is that we have bullish histogram flip on the MACD, and then we have a really strong support zone that we've continued to bounce off since the correction in the beginning of the year when we found a bottom at 6,000. Bitcoin has really respected this $58,000 to $6,000 price range, and I don't really think that it's going to stop respecting that price range currently. Obviously, like I was saying before, I have a trading plan for the other outcome, meaning that I have a stop loss, and then I'll probably short a little bit on a leveraged exchange such as BitMEX if we do have a support failure here, because that would mean that this was a bear flag structure. So I was talking about how I use patterns a lot. If this was a bearish flag pattern playing out, which is possible, and it did break and there was a support failure, then we could easily test that level that I was talking about earlier, right? So I've got a stop loss. If there is a support failure, I don't get exposed to the market. But currently I see this as a bullish support pattern. So I'm buying on support. I'm treating this as a support. And one of the main reasons for this is because if you use a little percentage tool here, you can see that from the support levels that we've been touching right now to the previous low. So this is the previous low, 6%. The risk is pretty low. If you're buying in this area, your stop loss can be between 10 and 5% if you're buying near support right here. So that means if you treat this like a double bottom, if you play it like we played back here when Bitcoin came down to 6,400 and everybody thought that we were gonna dump and go all the way down to 3 right then, and I was thinking otherwise, we played this as a double bottom pattern. Is a double bottom. And you accumulate and you set your stop loss near the previous low, and then when it bounces, you can average some of it out. You can take some of your profits off the table, and you can let the market do its thing. And that's how I would play this as well, is a double bottom pattern, because the risk is good for it. Aside from that, this is what's considered to be a WXY correction. So this is going to be a little bit more complicated if you don't understand Elliott waves or if you're new to some of these trading concepts. But just understand that this wave structure is a corrective pattern. So we count that this was a W wave, this was an X wave, and this was a Y wave. And after this corrective pattern, you get a 1, 2, 3, 4, 5 impulse. And I'm not going to give you targets when I draw this. So when I draw this upward movement right here, don't get like freaking out on your keyboard or anything like that and sell at these exact prices that you see that are drawn in this video. If you want targets, please just go look into what I provide on my website. There's links in the document that's provided along with this video. But just understand that you'll get a bullish impulse on the upside. So again, these are not exact targets. This is just a projection of direction. So I'm just projecting the direction of the market that can occur. So that's what I'm looking at here, is an upward swing. So some price action on the upside, especially if the market breaks out of these resistance levels that we're watching, or if we get a breakout of 8,300. That will be really strong upside for Bitcoin. If 83 breaks out, that would be a strong double bottom pattern and result in a lot of buying action. Another reason that my primary count is actually bullish is because of the rounded type of structure that we're seeing in Bitcoin. Markets are very sine wave, and whenever you get rounded channeling like this, like we're seeing, we just have this price action that's rounding out as it drops. That tells me that we are likely to get some type of buying pressure come in. Because again, you got to think of it like a sine wave. If you don't really know that much about audio engineering, or you're not a musician or anything like that, then maybe I'll just draw what a sine wave looks like here. That's a sine wave, right? Just goes up and down like the ocean, like the sea. Because we kind of rounded up here and now we're rounding down, I also see that as a bullish signal here. The other thing is that this falling wedge pattern is strong, and that support level is really strong. So I think that Wells will see this as an opportunity to be able to pick up large positions with tight stop losses and play it as a bullish impulse wave. And then if they get stopped out, then whatever, they'll buy the dip later if the market sees further downside. So let's talk about what you would do if the market sees further downside, how you should treat this. As you guys know, for your long-term Bitcoin, I tell you to accumulate. So that just means have buy orders the whole way down and accumulate as the price drops. And don't care if your portfolio is going down and a little bit sideways while you're accumulating. Obviously, it shouldn't be going down that hard because you want to have some dollar tether in there. But if it's going down a little bit and sideways in your long-term portfolio during a correction, that's actually good because you're accumulating panic. So even if the value is dropping a little bit, and every time it bounces, you can average a little bit out, reduce some of the risk, and usually you can actually profit laddering down. When you're doing these short-term moves, and if you're worried about what you should do in your short-term account, if we do get that bear flag breakout, you should take a little bit of your portfolio, not anything crazy, use small amounts and short from support failure down to the major support levels. A few of these support levels would be in this range down here. And again, I don't want to give you the exact prices, but just understand that these kind of structures down here where there's resistance and support are areas where you could be taking your profits along that short if you do want to do a little bit of a day trade. Because if this is a bear flag and that has a support failure, then this would be counted as an A, B, C wave like this. And this could either go down to this level or even further. So this is all still to be counted as a WXY correction technically. So it would just be that the Y is ending in a little bit of a deeper low. So that means that this was an ABC wave, and so we just needed a little bit further of a wave down. So that's two primary counts of mine. Obviously, the one that I'm betting my money on is the bullish one, due to the fact that you can use a really tight stop loss. And I'm keeping my mind open for all secondary counts and understanding that downside risk is also totally possible. Okay, so let's do a little Q&A from the comments section. Ezina1 says, thanks for the videos, buddy. One thing I want to run past you, check out the monthly Bitcoin MACD. We're at extremes and the lines have crossed over near the top. Could this possibly be a longer term bearish outlook? So we're going to go ahead and look at this and talk about signals, especially since this is kind of something that people ask me a lot. Especially mixed signals you get with different indicators. Maybe you're using one indicator and one indicator tells you it's bullish and another one's telling you it's bearish. So we'll get into this, and it kind of goes along with today's video actually, but we'll just go right over to the trading view chart and open up a new one. I'm going to open up probably the Poloniex. So we're using the MACD currently, and this is on the monthly candlesticks. This is what he's talking about in the comment. The fact that these two lines have crossed over each other. Generally, this means on the MACD, when you have the two lines go up to the top and they cross each other, that signifies bearish momentum is coming into the market. Because this is an overbought area for Bitcoin, that would signify an overbought rejected prices. And this just kind of goes along with the fact that you have to keep an open mind because you're going to get mixed signals. One indicator in one time frame might be telling you one thing, and another indicator in another time frame could be telling you a completely other thing. Being aware of that really helps. This MACD has been like this for a while. They actually crossed a little while ago, and we've continued to see the price develop. I have been paying attention to the monthly MACD, by the way. I am aware of this. And if you look at it on the weekly though, you'll see a completely different story. On the weekly chart, you'll see something similar to what happened to the NASDAQ before it pumped. And on the weekly chart, you see bullish momentum, bullish divergence, and oversold conditions. So you're getting mixed signals, right? This weekly is giving you a really, really strong buy signal as opposed to the monthly giving you a sell signal. Now, I will say that I trust the weekly more because we have more price data. And also the MACD can be a lagging indicator, meaning that this monthly swing right here might not actually take kind of place. Maybe prices rally and either make a bull trap, or prices rally like this and continue to grow on the upside. So that monthly MACD is something you do want to watch, but just be aware of the fact that you can get mixed signals. You want to work with the ones that are giving you the signal in the most time frames. So you want to kind of cycle through all of them. And currently, the 1 week looks really good for the MACD on Bitcoin. The weekly MACD looks really good. And then if you drop down into the 4-day, we also have pretty good looking MACD on the 4-day, a low volatility in the histogram. We have oversold conditions. And if we check out the 1-day, we're also getting a bullish flip on the 1-day and a bullish momentum shift with the histogram on the daily candlesticks. And then if we go into the 12-hour candlesticks, 12-hour, we're a little bit oversold still, but we're kind of in the middle range. So the 12 hours is kind of giving you either way. It could go either way. There's not a ton of signaling on the 12 hours. So, but yeah, the daily is looking really strong right now. And we just got that bullish cross, that similar thing that happened. See, that's the bearish cross right here that happened on the daily at 20,000. And then we did get another bullish cross right here near 74 before we went for 1100. So that's just when these two lines cross over each other like we were talking about earlier. Oh yeah, the monthly MACD could have some effect on the price of Bitcoin. This is why we use primary and alternate counts to keep a perspective of all the different options and possibilities. But right now I'm looking and leaning towards the fact that the daily and the weekly are showing more strength and more coincidence with a signal being bullish on those MACD timeframes. So I hope that answers your question. All right, so the Coinigy sign up is right here if you want to do altcoin trading and technical analysis. Also, Bitcoin and leverage trading with BitMEX. Sign up links currently right here. And if you're new to this, definitely do not do this. But if you have been around for a little while, then you can go ahead and register here and do some leverage trading. If you like what I'm doing, go ahead and donate to this Bitcoin address here. And if you want to check out the VIP course and get exact details on targets and stop losses and updates on the prices of Bitcoin and technical analysis, then go ahead and click on my shop right here, highaltitudecrypto.io, and check that out. And then here is the link for the coin signals if you want to do charting on CoinMarketCap coins.
Thank you so much for tuning in today's video. I hope that you learned something. If you have any questions or comments, go ahead and drop them in the box below, and I will look forward to seeing you guys in the next video. As always, stay profitable out there.